What's up, guys? Alvaro here, and welcome to the Bilingual Stock Market channel again. On this channel, we talk about the markets, but we do it in English and Spanish as well, so you can pick your preferred language. And in this video, and as I do it Mondays through Thursdays, I want to make a quick stock market update. So I want to break down some technicals going over S&P 500 and the NASDAQ 100, but also breaking down from a technical standpoint 4 stocks that tomorrow are going to be on the very top of my personal watch list. So without further ado, let's get right into the video. And the markets were a complete disaster today, guys. I don't recall any recent trading session in which 3 out of the 4 major indices went down 2% or more. So this was an absolute bloodbath today. And the worst performing sector was the NASDAQ, which went down 2.83%. Russell 2000 went down 2.25%. Dow Jones went down 1.63%. And the S&P 500 went down 2.04%. And who's to blame for the bloodbath that we saw today? Ta-da! The good old 10-year Treasury yield, guys. And I warned you guys about this situation in the video that we posted last Sunday. I told you, watch out for the 10-year Treasury yield. It's been going up. And and I said in that video, if the 10-year Treasury yield happens to burst above 1.5%, needless to say, 1.6%, most of the tech stocks, growth-oriented stocks, and higher multiple stocks are going to be under a lot of pressure. So this morning, earlier today, pre-market actually, the 10-year Treasury yield went up to 1.56%. Then it retraced a bit and it closed today's trading session at 1.54%. And guys, you need to understand that as of now, we have a great disparity between the inflation rate of the US, which should be by the end of this year, somewhere between 4 up to 5%, and the 10-year Treasury yield, or relative to the yields of the bonds. And why? Well, because all of the yields of the bonds of the US are negative yields. So who is going to buy a bond that is yielding 1.54%, whereas the inflation rate that we are supposed to have by the end of this year is going to be 5%? And the Federal Reserve says that inflation is going to be transitory. That's what Mr. Jerome Powell is saying. So if the Federal Reserve happens to be right, if inflation is going to be transitory, and if inflation is being, let's say, fueled by disruptions in supply chains, so we can make the case, if we are optimistic, that once supply chains are figured out, then inflation is going to come down, and that is going to also obviously affect the yields of the bonds in a positive way. But in the meantime, guys, while we have disruptions in the supply chains, we can expect the 10-year Treasury yield and the yields of all of the bonds of the US to be volatile. And whenever we see a spike in the 10-year Treasury yield, the markets are going to be affected. Something that caught my eye today was the financial sector, guys. 10 out of 11 sectors that trade inside the S&P 500 went down today, and the financial sector, which is the sector that would be benefited the most of a rise in the 10-year Treasury yield, also went down today, guys. So the financial sector went down 1.63%, and the only sector that went up today, and it didn't go up much, was the energy sector. But I have already told you plenty of times here on the channel that the energy sector is not it isn't an important sector inside the S&P 500. So if the energy sector goes up a lot, but on the flip side, we have the financial sector going down 1.63%, and the tech sector, which happens to be, it was today the worst performing sector. The tech sector went down today 2.94%. So in summary, if the financial sector goes down and if the tech sector goes down as well, then we are very likely to have a red day in the S&P 500, regardless of whatever the other sectors that trade inside the S&P does. So, and as I was telling you, the financial sector, which is a direct beneficiary of higher yields, went down today. So the only explanation that I can think about here, guys, is that the financial sector was very overbought and it was due for a pullback. And this pullback of the financial sector is coinciding with a hike or with a run-up of the 10-year Treasury yield. But this was very weird, so let's see what happens tomorrow with the 10-year Treasury yield. It actually retraces a bit into the closing bell, and as I just said, it closed at 1.55%, and it ended up going up today 0.066 points. And now let's go ahead and take a look at the S&P 500 and what is going on over here, guys. So the S&P, and as I just said in the introduction of this video, went down today 2.04%, and it closed today's trading session at 4,352 points. If I pull up here the 1-day, 1-minute chart, the bulls managed to find support at 4,346 points, 43.46. We saw a massive drop as soon as the trading session opened, and the bulls found support at 43.46. So what's the most important task for the bulls in tomorrow's trading session? Well, the most important task is going to be taking on this 180 SMA on the 4-hour chart at 44.21. Can the bulls perform this task tomorrow? This would imply that the S&P is going to have a very positive day. We went down today more than 2%, so it could happen tomorrow. Yeah, that could very well be the case. Check this out, guys. This 180 SMA on the 4-hour chart at 44.20 coincides with a previous area of overhead resistance in which the bulls of the S&P already failed on 1, 2, and 3 occasions before. And on the flip side, what's the most important task for the bears of the S&P 500? They need to take on 4,300. Can they actually perform that task? 4,300 is a previous area of support that acted as such for the S&P back in early July. And needless to say, guys, last week, I think that this was on Monday of last week, the bulls failed at 43.07. So that's an area in which the S&P 500 got very oversold, and then we saw a very, let's say, a strong relief rally. And if we take a look at the relative strength index at the RSI of the S&P, it is at 33 points. So I think that the bears could carry out this task tomorrow, guys. We still have room to the downside over here, no doubt about it. And watch out for the relative strength index of the S&P on the 4-hour chart, because on Monday of last week, when the relative strength index of the S&P went down to 18 points, we saw a massive bounce back up. So, and taking into account that the relative strength index of the S&P is at 33 points. So if tomorrow, I'm thinking, guys, this is wishful thinking at this point, if tomorrow the bears can fill this gap down to 4,300, the RSI of the S&P is going to be lower relative to 33 points. So maybe we could be seeing the relative strength index of the S&P at 18 points or 20 points, and that might be a signal that the S&P could see a relief rally. So very good work for the bears today. And yeah, I think that if the bears of the S&P want to unleash a deeper correction, in the case of the most important index of the US, they just need to take on 4,300. That is going to change there is going to be a shift in the momentum of the S&P 500, and we could be definitely going even lower than 4,300. And in the case of the NDX, and by the way, guys, I was almost about to forget to tell you that today we had Janet Yellen and Mr. Jerome Powell testifying to Congress to the House. Nothing very important was said, but there are some people over there that are concerned about the debt ceiling, and both Yellen and Powell said that an agreement has to be found, because otherwise, if there is no common ground between Democrats and Republicans when it comes to the debt ceiling, that is going to be extremely, but I mean extremely negative for the economy of the US. And Mr. Powell also highlighted the fact that yes, that we are going to see the beginning of the tapering process anytime soon, but he also highlighted that we are still pretty far away from a hike in interest rates. So nothing really new was said over there, and they were, I think that they were like calling out, Democrats and Republicans in order to find common ground to raise the debt ceiling. In the case of the NDX, this index went down today 2.86%, and it closed today's trading session at 14,770 points. So let me zoom in here. On the 4-hour chart, we can make the case that the relative strength index of the NDX is a bit low. It is at 26 points. We saw the RSI of the NDX on Monday of last week at 19 points. So we can make the case that we still have more room to the downside. But take a look, guys, at the spot in which the bulls of the NASDAQ 100 found support today. 14,768 points. This was no coincidence, guys. 14,760 points acted as a lower support for the NASDAQ 100 back on August 19, when we saw a decent drop in the NDX. So the bulls of this index managed to find support at a spot that they were supposed to find support at. So the most important task for the bears in tomorrow's trading session is going to be an easy one, arguably, guys, because take into account that the NASDAQ 100 closed today's trading session at 14,770 points. So the main task for the bears is going to be breaking to the downside 14,770 points, which seems to be an easy task because they are already there. We can make the case that the RSI is a bit low in the NDX, but as I said before, guys, on Monday of last week, we saw the relative strength index of the NDX dropping down to 19 points, so why not? We could see another red day tomorrow. And in the case of the bulls need to take on this 180 SMA on the 4-hour chart at 15,140 points. 15,140 points. Remember about this, guys, it's a former area of support that already acted as such back on August 23rd, but we are also talking about a former area of overhead resistance in which the bulls of the NDX already failed on 1, 2, 3, 4, 5, 6, 7, 8, and 9 occasions before. So tomorrow is going to be a very interesting technical day, guys. I think that if the bears are able to break 14,770 points to the downside, that might be a sign. And obviously, guys, we need to keep a close watch on whatever the 10-year Treasury yield does. If the 10-year Treasury yield keeps on going up, I don't think that 14,770 points is going to provide a good support tomorrow, and that might be the beginning of a deeper correction in the NASDAQ 100. And by the way, how much has the NDX dropped so far? Almost 6%, guys. So let's say that the bears get away with it and we see 10% in the NDX. What are we looking at? We are looking at 14,100 points. We are not that far away, guys. We are not that far away. 14,100 points could be the final destination. Now let's go ahead and take a look at AMC Entertainment, which is a stock that we always go over. AMC went down today 5.88%, and it closed today's trading session at $36.99. So let me zoom in here on the 4-hour chart, and this is starting to look ugly, guys. So unfortunately, the apes of AMC couldn't hold $38 as lower support in today's trading session. And take a look at what I told you in yesterday's video. Take a look at how this 50 SMA on the 4-hour chart is about to cross below this 180 SMA. So this is going to be a death cross that might be unfolding in tomorrow's trading session. This is a bearish sign, And if that death cross happens to unfold tomorrow, then what are we talking about, guys? What's the next important area of support for AMC? $32. $32 is a previous area of lower support that already acted as such for AMC back on August 20th, but we are also talking about a former area of support that acted on 2 occasions back in July. So can AMC pay a visit down to $32? I think that is possible. Nevertheless, guys, take a look at the relative strength index. The RSI on the 4-hour chart, it is at 25 points. It is already very low. AMC is already trading in oversold territory. So if the bulls of AMC can hold tomorrow $32 as lower support, if AMC can actually pay a visit down to $32, then the relative strength index of AMC is going to be even lower, and that is going to increase the likelihood for the bulls of AMC to find support at a previous area of lower support and then bounce back up. So I think, guys, that in technical terms, $32 is going to be a line, or should be a line in the sand for the bears of AMC. If $32 happens to be broken to the downside, I think that this might be good night, Irene. So it is critical for the bulls, or for the apes of AMC, to hold $32 as lower support, worst case scenario. On the flip side, what would be the most important task for the bulls of AMC? Obviously, reconquering $38, which happens to be I already told you, $38 is a previous area of resistance that acted as such on 2 occasions in August, and we are also talking about a former area of support that acted as such on 2 occasions back in early June. So that's the technical situation for AMC as of now, guys. The bulls need to take on $38, and they need to start to consolidate slightly above $38. And the bears need to take AMC down to $32 and possibly try to break this previous area of lower support to the downside. And the second stock of this video is going to be a stock with which I took a loss today, Adobe, guys. I'm going to show you that trade right away, by the way. So let me show you. In the case of Adobe, I ended up picking up how many shares? 30 shares of Adobe at $584, paying $17,519, and I ended up selling out of these 30 shares at $581, and I was paid $17,435. I ended up taking a loss over here of almost $80. So the NASDAQ 100 and the NASDAQ and the S&P 500, for that matter, we're not looking any good today. I closed this position at around 1 p.m. Eastern Standard Time, and I'm glad that I closed this position, guys, because Adobe ended up closing today's trading session at $578 with 77 cents, and it went down today 4.12%. So tomorrow, this is going to be the stock that is going to be on the very top of my personal watch list, guys. Take a look at the relative strength index of Adobe. It is at 13%. The stock of this company is severely, but I mean severely, oversold as of now. So something that is worth pointing out over here, guys, is that the bulls managed to find support into the closing bell today at $578.88. $578.88 is a previous area of overhead resistance that already acted as such on 2 occasions for Adobe back in June. So this was an area in which the bulls of Adobe were supposed to find support at. So if tomorrow, guys, I managed to see Adobe holding, let's say, $579 as lower support. If I see Adobe closing hourly, let's say 2 or 3 hours, slightly above $579, I am going to be tempted in order to start another position on Adobe, in which case my price target is going to be the next important area of overhead resistance for the stock of this company at $610. $610 is a previous area of support that acted as such back on July 27, but we are also talking about a former area of resistance in which the bulls of Adobe failed on 2 occasions back in mid-July. So if I were able able to take this trade the way that I am describing it, and as I just said, picking up some shares at $580, let's say $579.50, and selling out of my shares at $610, I could be locking in a profit of almost 4.64%. That would make up for the loss that I took today. And you guys can clearly see over here on the 4-hour chart a death cross that unfolded today. We can see the 50 SMA on the 4-hour chart that crossed below the 180 SMA. So can Adobe go lower? Yes, it can, guys. But with the RSI already being at 13 points, I think that the stock of this company is a very strong candidate in order to see a relief rally. So watch out tomorrow for Adobe starting to consolidate slightly above $579 and then bouncing back up. And now let's go ahead and take a look at Pinterest. And in the case of Pinterest, ticker symbol PINS, the stock of this company has been hammered, guys. Jeez. So Pins went down today 3.38%, and it closed today's trading session at $51.95. So let me take a look at this, guys. Pinterest is trading as of now 42% off its highs. Wow. Unbelievable. So, well, I think that this is a buy opportunity, guys. No doubt about it. So let me zoom in here on the 4-hour chart. And if tomorrow I happen to see Pinterest, and as I just said in the case of Adobe, and as I have been telling you here on the channel, guys, since we are, in some sort of corrective phase in the markets, the technical pattern that I am looking for before starting any position with any stock is a consolidation pattern. So I need to see the stocks that I want to take trades with. I need to see them consolidating slightly above important areas of resistance and support, of former areas of support and resistance. And obviously Pins isn't going to be an exception to the rule. So $51 acted as lower support for Pins back on September 21st, and maybe take a look at how we could be potentially seeing over here a double bottom formation on the 4-hour chart. So if tomorrow Pins happens to, as I just said, trade slightly above $51, then that might be a sign that this double bottom formation is unfolding, guys, and we could see a relief rally for the stock of this company. So if I happen to pick up some shares of Pins, let's say at $51.90 or 51 or $52 or something like that, then my price target is going to be the next important area of overhead resistance for Pins at $58. If I happen to be able to take this trade the way that I am describing it, as I just said, picking up some shares at $52, let's round that up, and selling out of my shares at $58, I could be locking in a profit of almost 10%, guys. This would be a very, but very good profit, and therefore a very but very good trade. So $58 is an area of overhead resistance in which the bulls of Pins felt back on September 1st and also back on August 26th. So watch out for Pins, guys, because I think that the stock of this company is due for a relief rally, and we might see the completion of this double bottom formation maybe in tomorrow's trading session. And now let's go ahead and take a look at one of the victims of the 10-year treasury yield today, good old Apple, guys. And in the case of Apple, the stock of this company went down today 2.38%, and it closed today's trading session at $141.91. And Apple is yet again, guys, in oversold territory. We can see the relative strength index of the stock of this company at 28 points. So, guys, $141-ish is a buy for Apple. No doubt about it, for any intents and purposes. In my case, I would like to take a quick trade on Apple. And check this out. So $141-ish is a previous area of support that already acted as such for Apple back on July 19. So if I happen to pick up some shares of Apple, as I just said, at $141, then my price target is going to be the next important area of overhead resistance for the bulls of Apple at $145. $145 acted as lower support on 2 occasions in August, but we are also talking about a former area of overhead resistance in which the bulls of Apple felt back in early July. So if I were able to take this trade the way that I am describing it, picking up some shares at $141, $141.30, and if I can sell out of my shares at $145, I could be making a quick profit of 2.46%, nothing to sneeze at. However, guys, if I wanted to set a more ambitious price target, what about $151? If I were able to take a trade from, as I just said, $141-ish up to $151, I could be locking in a profit of almost 7% with a stock that offers a very low risk, such as Apple. So in the case of $151 or $152, we are talking about a former area of overhead resistance that acted as such for the bulls of Apple back on August 17. So watch out for Apple, guys. The relative strength index is very low. Yes, we saw the RSI of Apple even lower last week when it hit 20 points, but this is a strong candidate as well to see a relief rally. And what about, I haven't noticed this, guys. We could make the case that if Apple happens to hold $141 as lower support tomorrow, we could be seeing some sort of double bottom formation. And yes, guys, I know that you guys can make the case that I am spotting this left and right, but this could be a double bottom formation, guys. So if this double bottom formation happens to be completed at $141, then the gap up to $145 could be easily filled by good old Apple. And with Apple, I am going to wrap up the video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays through Thursdays, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to the channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel in which we talk about the markets, but we do it in English and Spanish as well, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys tomorrow once again, 3 or 4 hours or maybe 5 hours after the market closes. Peace out.